is Matt Moran. Many of you know Matt. He has been the former CEO of Lombard for quite a while, so he knows a lot about cross-border distribution of insurance products. Now he is a partner with PricewaterhouseCoopers, and we have the privilege to have him with us today. And he would like to share his views on future distribution models. Please welcome Matt Moran.
Thank you very much for your kind introduction, and thank you to Farad, to Marco, to Stefan, and James and all the team for putting together such a great event, and also to the sponsors here. I spoke with Stefan earlier in the week, and we discussed the topic. And I know afterwards you have a deep topic around the regulatory aspects of distribution. So what Stefan said to me is that we'd love to get a view of the future of the sector and the future of the insurance market. So my topic is a little more, I would say, a little bit broader, just to give you some thoughts of PwC's views and our own views of the sector. So, as you know, we invest a huge amount in thought leadership across the insurance industry, and I've shown just a few samples of you there in front on the screen, both in insurance but also in the interaction with wealth management. So we have a global wealth management survey that's released every year. Our next one will be number 6. We have an insurance survey which is running into its 17th year now. And as well as that, we've gone from general thought leadership into more deeper topics in the space. And I just highlight to you what those themes that are pervasive globally, and then we're going to try and bring them back down into a Luxembourg context. First one is the enormous regulatory pressure and change in the sector. In our global survey to insurance CEOs, 90% are concerned about over-regulation and the impact on their business. So this is a huge factor, and indeed it's the most prevalent of any sector from our global CEO survey. Secondly, the whole quest for operational efficiency and getting technology right to handle our businesses and to make sure that the sector is ready to deal with wealth management of the future. And there's actually quite a change in that over the last 24 months, and I'll talk about that later, in terms of where people are focusing their investment and where we believe people should focus their investment in the future. With that, you have what I would say is a change to the approach of servicing the customer. And we've seen that happen in many other industries, but less so in wealth management to date. But it's our belief that you will see it come apace in the coming 24 to 36 months. And with that, a real understanding and changing of how the wealth management sector deals with its client base, and making sure that it's very plugged into the client base to understand their needs. So out of all of those, I summarize the findings, aligning to the customer, and both private banking, wealth management and insurance companies, and the need to align the front office of our business, of your businesses, to the customer needs. And this is the change I mentioned earlier. Whilst in the past number of years, there has been a huge focus on getting the back office right and getting legacy systems working well, but now there is a real shift in focus to try and make sure that insurance companies and wealth managers take advantage of what can be done in the front office, both to reduce costs but also to increase that connectivity with the customer. So enhancing ops and technology, and of course managing the risk and cost of keeping up with the regulatory change. And not only keeping up with the regulatory change and not to be driven by it, but to incorporate it in your strategies and in your technology so that you are compliant, but that you've got a customer-friendly approach across your business. And those who will be successful are those who can manage this massive change agenda, which is unprecedented in wealth management and unprecedented for you in the wealth insurance sector. Just a few highlights going back to the global CEO survey, and I'm sure you're familiar with these already, but just to highlight some of relevance in particular to insurance and wealth management, and I've picked 4. 91%, as I said earlier, of insurance CEOs are concerned about level of regulation, how they handle regulation, and how this will impact their future growth. We have 81% of insurance CEOs across 37 countries, and that's more than 80 CEOs, looking today to see what can they do with digital technology, what can they do with this revolution to engage better with customers. And typically the insurance sector has been slower and the wealth management sector has been slower than other sectors to embrace. But what we've really seen a change in the last 12 months is CEOs beginning to grasp that nettle and beginning to see how they can use it to their advantage. On the upside, compared to 3 years ago, 2 out of every 3 CEOs is more optimistic about the potential for growth. And I would share personally that optimism that from where you sit in Luxembourg, the ability to grow international businesses, really, I think we will be uniquely positioned over the next 3 years. I flagged the 2, which I've spoken about already, being 9 out of 10 are worried about regulation. But the other key theme coming out of our Insurance Global CEO survey was nearly 70% fair or are engaging to see what new technology can do for distribution channels and how they engage with their clients, both in terms of the cost, but in terms of connecting with their banking channels, their IFA channels, to ensure that they are well positioned for the future. And this is where we see some potential for disruption and potential new entrants into the market. So it's essential as incumbent players that we grasp this opportunity that's presented with us with the change in technology. And I'll highlight 1 or 2 examples shortly. What's happening in wealth management? Well, it's the sector continues to grow. In the next 3 years, up to in 2015, 16, 17, the sector is expected to grow by 8% per annum compound. So still very strong growth across wealth management in general. Of course, that is spread geographically. But what we're also seeing is that, that affluent investors are being shaped by their experiences from other sectors. So what's happening in other sectors is beginning to lean over into wealth management. So typically, it has been the slowest sector to adopt to technology. Now we're seeing that is beginning to change. And what I talked about earlier, that whole connected experience and how we engage with that client base, not just in respect of a compliance matter, but also in respect of that continuing touch point with either the distribution channel or the customer. And one thing that is interesting is the gender agenda, because women are much more influential in global wealth than a number of years ago, and they control 50 to 60% of investment decisions today and spending. So that is a big change from if we look back at our survey some 5 years ago. We see on the right-hand side a great tiering of the wealth sector. So it is more split today, and therefore you can take advantage of penetrating various sectors because that data is available in the market today. If you look on the right-hand side in terms of how we used to look at just ultra high net worth, mass affluent, and now those tiers are greatly more granular, and that of course influences future regulation and how we'll be able to tackle that. I mentioned technology and where insurers or wealth managers feel they are doing well. And also the whole area of sales, talent, and channel building. So on the left-hand side, you see developing sales talent. And that's a key area of focus for CEOs, and I believe that's crucial in terms of a Luxembourg market perspective. The real focus on channel, the real focus on bringing product to new markets and making sure that our sales capability, which is a unique differentiator, is up to speed and able to handle that. And on the right-hand side, you see that the industry is investing hugely in wealth management across the global space to enhance client relationship management. And this is the shift I talked about earlier, where in the past we're looking at back office transformation. In the last 24 months, there's a real switch to use technology to enable the front of house for straight-through processing, for connecting with the customer, therefore giving the customer a better experience, but also reducing the cost of back offices. And that is essential, clearly, with the amount of change that is happening in the sector. So a little bit of a study that we've done in North America, and you can see that, that technology spend in wealth management and insurance will increase in the coming years. But if you look on the bottom right-hand side, you'll see that more than a half of it is going into front of house. If you go back 3 years ago, that was close to 3/4 in back office and legacy. So I flag that because I think, even though we haven't seen it much to date, I think there is a significant potential that we're going to see changes with our private banking partners and changes in your businesses in terms of connection with our channels and our customers. Distribution, and I know you're going to talk about distribution with Karine and colleagues in the next panel, especially from a regulatory impact, and I'll cover a few of them at the highest level. But on the right-hand side, you can see how we view the new front office in terms of where you will split and categorize your customer base, how you will deal with the high net worth. And on the bottom right-hand side, the opposite, where we're going to see much more self-fulfillment and self-direction of investment going forward. So we really see the high-touch market going further and further to higher net worth customers. And that combined with technology to manage that connection and reduce the cost. And we say on the bottom left there, a standalone, commercially successful entity that has a true front to back office vision. So a voice of the customer right across the back office of the business right through to front, and a greater connectivity rather than historically the wealth management sector has been known for silos. And all those functions of the wealth business must come together in order to prosper, to deal with customers, and to manage the cost agenda. One CEO in our recent survey, a global wealth manager, said the inexorable move towards transparency and consumer protection will cause significant disruption to business models unless dramatic action is taken. For many firms, it may already be too late. A CEO of a major bank in Europe and his view of the changes to our wealth management sector. And I love this slide. When I joined PwC 5 months ago, I got this slide in terms of what's happening in regulation. I never knew before I joined that so much was going on. But if you look across the range of regulation that's affecting us, one, to improve stability and governance of financial institutions. So there's a government or a political state-led direction that's affecting wealth management and insurance. There is financial markets integrity and transparency, where we have had enormous change and enormous change to come in the next 2 years. The whole area on the right-hand side of restoring the confidence of our client base, the confidence of the investors, and of course, something we're very aware of is the tax agenda and how the OECD is driving changes to taxation and how it impacts our businesses and how we have to adapt to manage those changes and make sure that we, in our business, in the insurance sector out of Luxembourg, remain very relevant in international markets with these changes and adapt our business is to cope with them. PRIPS, and I know you'll talk about it in detail shortly, but the practical implications of PRIPS to make sure that we have kids in place for our clients. The private wealth sector has gone through this, as we know. Our banking colleagues have already gone through this transformation recently, and now the insurance sector will have to take it. So in effect, PRIPS is looking to harmonise the rules on sales process, on pre-contractual information, on conflict of interest and conduct of business. So we have to manage to build that into our systems and to manage the reporting afterwards that's required to ensure our information with clients is up to date, but also our information to regulators is maintained going forward. MiFID II has a big impact on operating models and distribution, clearly, both in terms of the service levels and how we'll categorize and stratify our client bases to decide how we're going to work with them. It'll also influence greatly what products we will design for the future and what collaboration there will be with third-party product providers. So another interesting point that came out of the insurance CEO survey is that nearly 2/3 of them have been involved in some sort of connection or alliance with a third party in the last 12 months, and they expect that to continue. So the ability to pick specialist providers to assist your business going forward. And of course, in overall distribution, inducement, information, disclosure, conflict, there's also a play. And of course, it's adapting what has happened in MiFID-like regulation around the world. Most notably here, we noticed the UK with RDR. We noticed the changes in Switzerland on retrocessions. We noticed the ban in commissions for retail investment in the Netherlands. So what we're seeing is a harmonizing of all those regulations. Whether they will be harmonized is yet to see. I'm sure countries are going to adopt their own versions on a country-by-country basis where they have some flexibility. But already this train is well moving, and in the next 2 years for the insurance sector, for our sector here, it's going to have massive implications. And how we handle that and how we handle it in a cost-efficient way and what we might have to do to handle it are key questions for the CEOs in the industry. IDD, to mention another one, the Insurance Distribution Directive, and the overlap and connection with these various directives, I'm sure will be covered to some extent in the next session. What's the Luxembourg agenda? I've met 26 CEOs or senior executives of Luxembourg insurance companies over the past 10 weeks. And I flag what I think are the 4 key areas that are of key focus to the sector today. And what is, as you would expect, that the Luxembourg CEO agenda is very similar to what's happening globally. So it's not remote from Luxembourg, it's the same what's happening on the ground. So the first area is a strive for growth. So how do you manage to focus on growth and driving businesses whilst you're handling this regulatory and business model change? Growth, I think, can be achieved from Luxembourg by entering new markets, by increasing the speed at which you penetrate new markets, and by finding a way to get product designed and into the market more quickly. Some recent studies have shown it takes 12 to 18 months for an insurance company to innovate. That is regarded as slow compared to other sectors. And I think we need to get that pace up so that we can tackle new markets, both within the EU and outside of our current confines. Business models, of course, have to change. So given what's happening in our neighbouring countries and neighbouring markets, you've got to adjust your model to be able to penetrate those markets. I think a key area for both business model and growth is focus on the distribution channel and building relationships with private banking partners. And it's more than just the historical relationship of a salesperson with that private bank, but it's actually building the technological interface with the bank so we're very easy to work with the owners of the client. I think that will be critical going forward. As well in business model, it's setting up light branches to tackle markets in certain countries, but a much more overt marketing into the market of the benefit of our structure into wealth management. You have some other trends that will help us. In global asset management, which is expected to grow from 63 billion to over 100 billion by 2020, there is a significant shift into alternative assets. And again, the insurance sector here can play a big role in capturing part of that market going forward. Technology we've mentioned front to back. Many of the companies here are grappling with how do we manage legacy, potentially how do we mutualize cost? Is there a potential with PSA legislation to make that happen so that you as CEOs and you as people in your business can focus on the real value drivers, which are brand and solutions and into various markets, penetration of various markets. And with that, as I mentioned before, clearly for the Luxembourg community, it's the impact of the raft of regulatory change that is coming, and in particular tax changes, BEPS, the OECD focus on insurance, and the ability to cross borders, which historically under the European ideal we could do with ease, and today that is clearly more difficult. There are countless examples, being the sostituto d'imposta in Italy, being the new premium wealth tax introduced in Belgium, and we can go on and on. So we've got to find ways around making sure our product and solution remains viable into the market, and that we can find cost-effective ways to build flow and higher volumes. Those who can handle that will be the winners in the market. And clearly, given the number of companies here, we expect to see significant consolidation, just given the size and given the fact that not all will be able to grapple and handle this change. And not all will have shareholder support to handle that change. But the themes are consistent. What we've seen globally, what we've seen in various sectors, what we've seen in insurance globally, and what we're seeing here locally, those themes all resonate and are all relevant to CEOs today. I mentioned, just to wrap up, about what's happening in other sectors and our belief that this will also influence insurance and wealth management in particular. Maurice Levy, the CEO of Publicis, said that everyone is starting to worry about being Ubered. It's the idea that you suddenly wake up to find your legacy business gone. Clients have never been so confused or concerned about their brands or their business model. And he christened it the digital tsunami. And that was back in December. And I don't know if people know the story here of Alipay in China. But the next graph, whilst you won't be able to read the numbers, tells the story. Tianhong, back in December 2012, had 10 billion renminbi in Chinese asset management. By September 2014, from a standing start, it had become the biggest asset manager in China. And that's the technological revolution that is impacting wealth management today. And I just encourage you to engage in that, to really think outside the box in your businesses, because it's about connectivity to clients. And this is Alibaba, who's the Google equivalent in China, just creating that connectivity, which meant that Jianhong could explode its market presence in such a short time. So that whole innovation cycle and the need to innovate quickly, but also to benefit from technology that's out there that allows you to innovate at a pace and cost that is much less than previously, is something I think for our sector to consider here in the next quarters and years ahead. Thank you very much for listening to me this morning, and welcome on any questions. Merci, Fernand.
Thank you, Matt. So if I try to sum up in one sentence, it's not only about keeping up with the regulatory challenges. Insurance companies also need to think about innovation and prepare for digital insurance. So that's a quite heavy agenda. Are there any questions to Matt in the room? Yeah, thank you. Just speak up loudly.
Okay, Matt, this digital revolution, it's something that you see a lot in the retail insurance, also in non-life. You see a lot of new initiatives. If you look at the Luxembourgish market, what's your view on, let's say, digital revolution and the connectivity with our clients?
Well, I think historically we have grappled with that, Peter. So historically we haven't had that connection. We haven't interfaced with our banking channels in the most efficient way previously. And I think that's an opportunity for us going forward. It's not just the retail space, because people automatically think retail is the one that can be done because we're used to that today. And it's also not just about doing the same as we did, but just with new technology. So I think what we've got to do is find ways of connectivity that allow the flow of information between the insurance companies, the banks, and the clients in a seamless fashion. And if you can do that, you will make it much easier for the bank and the customer to deal with you. And you will also dramatically reduce cost if you find that model. So certain parties, in particular in the banks here, are trying to grasp that area. And less so in insurance today, but I think there are some beginning to move. And I think it's an opportunity, you know, given the fact that we're going to have an increased cost base going forward, the need for volume, the need for growth, so to reduce the average cost of policies, but also the need to rethink how we connect and how we transmit data, both to the regulatory world and to the client world, can transform business models and make you relevant and fit for the future. So I think people are beginning to engage in it, but it's, you know, other sectors have moved more quickly than the wealth management and insurance space.
Merci beaucoup.